All right, it's Video Mania. All right, Reardon. I'm so lazy that I hate typing. I'm going to make another video and answer your questions. All right, your first question. When I say the B area is a good place to go short, I believe it's the top of the channel for a low risk entry with stop loss above the channel. Yes. So this B that you have marked here, I like that entry because the overnight channel was just kind of right from there to there. We were looking to go short, as that big yellow arrow shows us, and it happened right from the top of that channel. So that's a pretty decent place to go short. Now, why was I mentioning A? Well, you told me why I was mentioning A at the bottom of your post. It was after 4 or 5 so days of continually strong moving up move. It was the last kind of low between the last two up, pushes up. And so if that ever gets broken, which that was the first time I believe that had been broken in those 4 or 5 days on, I'm pretty sure I know it was, but somebody could prove me wrong though, but so anywho, it gets broken and then pushes further down. And that's a pretty good sign that that's a decent spot. I think you said, is it because support turned resistance or something like that? Let me see, did you say that? Yes, support turning to resistance. There it is. Sure. But for me, it could be that, but it could also just simply be that it provides low risk. So I've got a tangible place that I know price might go to, and I want to see it reject. And if it doesn't reject off there, I need to get the heck out of a trade. So, and that's pretty close to there. So, with a pretty good reward for taking that trade. So hopefully that makes sense. Number 2, you talked about an advanced strategy. It's not really advanced strategy. I've been on here trying to help people for about 120 years now. And in that 120 years, I think I've gotten a little bit better. I've tried to distill things down simpler and simpler and simpler. Used to be a wild maniac on here. Now I just try to distill it to the most simplest things that I possibly can. I try to adjust, and as I listen to and watch everyone and how they react to the things that I say, I've tried to get better. So I have distilled all of that down to basically 2 things. Understanding the nature of price. I want you to see the up and down movement of price. I don't care about trend lines. I don't care about anything else. I want you to just notice price moving up and down. And pay attention to what price does when it moves up and down, and really pay attention to it and learn it. And if you're going to learn something every day, watch price every day, because surprisingly price does a lot of the same things over and over and over and over. And so, and learn about that up and down nature of price. And then number 2, most important thing is to have some discipline, because what everyone's lacking that I've noticed over the 120 years is that no one has discipline and no one really looks at price. They just want to hit the button and trade. So if you can do those two things, if you can introduce some discipline and understand the nature of price, you've already made leaps and bounds towards being more successful at trading. And so I put in a rule. I put in a bunch of rules, but one of the rules that you've heard me for the 120 years talk about is you should see a price action before you take a trade, and that price action should be close to where you want to take a trade. So there was a price action up here at B where we would want to do a trade from, so everybody who has ever listened to me should have taken a trade right there. And so or especially Scott, if he was looking at this pair that day, because I think Scott's about the only one listening to me anymore. So if he was taking a trade on that pair, I would have expected him to go short right there. Now, of course, he's got yen fever right now. I've noticed a lot of yen trades and some pound fever. So he's dumping our friend the euro, but that's all right. We won't hold it against him. Now, what I mean by advanced is simply something I do. One of those things that you see me do, but don't do it until you become very good at doing the most basic thing. So that means sometimes I get a price action where I don't want to trade from. Well, I didn't want to trade short from here right above this area because I had a lot of risk and low reward. So I will but I did know that I wanted to get short from up here somewhere. So if I get an action down here and it moves all the way up here and I don't have an action, I'll say, you know what, I had an action here, so there was my price action, and I'll call this a better than full retrace. So it's just now, couple things there. I understand the nature of price. I understand I want to go short. I understand that it's staying below here. I have a price action. So what I've done is I've said, okay, you've got a price action. I really want to get short here because it didn't go above that. So I really want to get short. So I would use that as an excuse to get short. All right. Now I didn't take it that day. So don't get hung up on this. Just ignore it. Just take action where good places are. Here was a good place. Took the trade. Made a heck of a lot of money. Here was an action, wasn't up to take it, but hey, you would have made a heck of a lot of money. So just do the basic things and you'll do just fine. All right, did a basic thing right here, did just fine. So don't get caught up on that. All right, keep it simple. Understand the nature of price, the up and down movement of it, and then understand and then have some discipline. Wait for a price action and take a trade. All right, and no, nothing's invalidated because you get a price action and the price goes above that area. No, I don't think I've ever said that. Maybe, I don't know. I don't think I've ever said that. So I don't know where that came from. But yeah, that's why. So my best advice would be just totally ignore your whole C commentary there, and ignore when I say better than full. Hopefully Scott's watching these videos, and he'll know what the heck I'm talking about. So. Also, I never noticed that it made a first lower low at a few days after continuously making higher highs. That comment was helpful. Good. That's what I'm talking about, understanding the nature of price. That's exactly what I'm talking about. So, price, it was one of those things where for the course of a few days, we get that from time to time. Over the course of a bunch of days, the price just consistently moves in one direction. And instead of being the person constantly trying to take a trade against that direction and losing all your money, wait until it does something like this, then go short. And you'll be a heck of a lot happier. All right. And until it does that, keep looking long, just like we did. It was moving up. We looked long. Hey, then it went down. Now we can look short. And look at that. It worked out. So, that'll help you a lot too. Oh, look at that. 7 minutes, 120 years, 7 more minutes of goodness.